Okay, Thursday, January 12th, 2017. Okay, all right. Start off with the Australian dollar again. Australian dollar, little red dot here is resistance level, and it's pressed up against a previous minor bounce here. Money flow shows that there is bodies in this, okay. The Australian dollar and New Zealand dollar, they're a little more fully priced right now compared to, say, like the British pound and the euro. And we're going to get some data here in about 2 minutes to see how that begins to pan out. For right now, I'd be a little more defensive on the Australian dollar, just due to the fact that these are 2-day bars. Okay, so this is 2 days worth of data in each bar that we are opening up against resistance level here too, and that there's money in there. So caution on the long side, tighten up your stops on the Australian dollar if you're long. British pound, decent size hammer down here, and we're getting some follow through, okay. Money, obviously there's money that can move into this here. You can treat this as a double bottom for right now. I like the long side of the British pound. Canadian dollar, this is a little happy place. It's trading above it. I posted a link yesterday at Twits of correlation between, I pointed out the US dollar versus whatever. The one interesting one was the dollar versus cocoa. There was a negative 93% correlation. So if the dollar goes up, cocoa goes down, which I thought was interesting. Cocoa also trades in pounds in Britain too, in London. But on the Canadian dollar here, in regards to the correlation with oil, it's not 100%. America gets most of its oil, 40% of it from Canada. Okay, so a stronger dollar. Canadian dollar, okay. It's trading above a minor high here. There's still room to run for the money. It did press up against an upper resistance level and pull back. So it is getting repelled up here with higher prices. So also, once again, tighten up your stops on here. Euro, money flow is down here, prices too. I think there's just going to be a continuation here with the pound and the euro higher and the dollar coming off. Right here, though, what do we have? 107 and a quarter. I was talking about it getting to 107. This would be an area here, 107 and a quarter, where it may pause prior to hitting 107 and a half with the next resistance level. Japanese yen, I talked about it going to, 114, 113, 110. We're at right now about 114. There's still money that can move into it and move it higher. I look for this to continue to come off. And if the yen does continue to come off, it should affect stocks. You'll see it when we get to the Dow YM futures. This is the Mexican peso. It is seen half back on these 2-day bars. Money is out of it, so money can come in. I think Wednesday may have been the top on the U.S. dollar Mexican peso cross, but as at the end of moves, things get a little wider in that. So just be careful. Don't pile in too quickly on this here. But I'd be a big fan of buying dips on this. I think the peso will be one of the better traders for 2017 on this side, on the long side, or short the U.S. dollar Mexican peso cross. Here is the Kiwi, New Zealand dollar. It also is up against not as high as resistance level as the Australian dollar, but it's hitting a pivot resistance level. The money is in it, and the happy place is around 72, and we're at 71. So maybe 100 more on the upside on this one here. but eventually it'll roll back over and continue sharply lower. We're getting this is cocoa. It's been a persistent downtrend here, but it is beginning to try some sort of intermediate type sideways move. At best, I'll treat it as a sideways move, but it just seems like every day you get, here you get what, 4 days up, and then one day just gobbles up all of it. This may work out here as a pattern, reversal pattern, what we have up here in cocoa. 2266 would be the target to get something going on a probably a short covering bounce. Crude oil. Okay, so crude oil, just kind of mentally draw a line across here. This is the 52 area breakout. It's about half back, but there's a lot of money in here, so this is susceptible to a reversal on here. Last night I posted my first link on $17 oil, and of course I got the reaction I wanted to get, and mostly told me that the people that reacted to it haven't been around long enough to know that, yes, you can have $17 oil. Yeah, it's kind of like this. I get this all the time. The kids, as I call them, they'll read that it costs $1,000 to get gold out of the ground, but then they don't believe that gold can trade for under $1,000. And what that is that's the stuff that's already out of the ground. Okay, it's kind of like trying to convince them that they've never sold a house or a car for less than what they paid for it. And it's the same type deal. If it takes $1,000 or whatever to get gold out of the ground, yeah, it can trade for $300. They just won't dig it out of the ground. They're just exchanging what's already out there, and stuff gets recycled. What was it? South Park. There's a South Park episode where the gold just goes round and round and round out of the ground onto the QVC, gets sold as jewelry. Jewelry is given to the kids. The kids take it to the pawn shop, gets melted down. The jewels get pulled out, on and on and on. South Park. The Simpsons were good, and then you had Beavis and Butthead, and then you had Family Guy, and if I'm around for another 40 or 50 years, the cartoons will be interesting. But on oil here, I'd kind of play on the defensive side on this, just due to the money flow that's already in there. Anything under, I wrote about 52, and we're back into it now. We're at 53, but what is this? 51. What is that? 51. We'll say 52 again. Coming under 52 again, then it'll probably go down. Well, this isn't a very pretty pattern, but it'll probably come down to its happy place, 44. Here's 48. So 48, then 44. And then what do we have for 42? Then there's a chunk at 42, 43 in here underneath. But I'd probably go after the short side of oil up in here. We're getting a little more volatility. Once again, we're trying to, we're opening the market lower. I go over charts and charts and charts and charts all day long, and I'm shocked that what's going on underneath is a lot more different than what's happening in the indexes. A lot of selling. There's a lot of stocks I come across that peaked in 2014, 2015. Okay, so here's cotton. Cotton just continues one trend line underneath it, just runs up, goes up 2 or 3 days, and comes back. What's this? 2 weeks, goes up again. What's that? 6 days sideways. But as you can see, it's pointing higher. That's a pretty good volume bar down there. Okay, so that's on cotton here. Basically, it's still pointing up, but it's chop, as they call it. And we're talking pennies here too. So for me, I'd stand aside. But as it crawls its way up here, if it does break out, then things should begin to start extending in a normal type price pattern play like here, instead of this, sideways and up, sideways, the sideways chop. The dollar, okay, so the dollar around 100, I said, we're coming into it. I still expect the U.S. dollar yen cross to come down. We're at, like I said, about 114 and a quarter now. And then this will also talk about gold too. All right, so here's ES. Okay, now on this one here, we'll call it like a little Harami cross here, and then we get a follow through pattern. And then we're having some sort of basically an inside day, but it's if Thursday today, if we do close on the lower ends, we'll probably get something started. Okay. And I wrote about ES losing 100 from there. Like I said, I don't think on the pullback, I don't think that this is going to hold. Okay. Now, if the upper end doesn't hold, I think we're going to retest all the way back down here and then even further. Because I don't think that like these areas are going to hold on the breakout. It's just, there's just too much going on underneath for right now. Everything's very selective and a lot of sideways through here. It's almost like we're just waiting to pull the pin on the hand grenade. So this is on ES. Okay, what do I need? I need to drop these down. Okay, so a support level on here on the pivots. Let's do it this way. Okay, so here are overhead resistance areas for pivots. So if S&P's close under, what's that, 60, what do we have? 66 and 60, 65, 66. S&P's futures close under 66, 65, stay short, and then it'll basically lose this, and then there'll just be a washout on here. Support. What do we have for supports on here? 60, and then 56, 49, 50, then 43. I wrote about 33. I think it was 33 all the way down here. Oh, that was on the S&P. And then resistance for today, 77 and I think 80. Up here to 80. Yeah, 80, 77 and 80. All right. So for on the S&Ps, line at 61. Okay, we're getting close here. We're definitely getting close to the end of this run for now. Let's go back to a daily real quick. Okay, yeah, we may be working on a flag right here. Okay, so this is the daily. So you run up, sideways pattern, hammer, but now you're getting an inside type trade here. So we're down to the indecision. What I think we might get though is the inauguration. The same thing. You get the inauguration, blah blah blah. You get your speech. You get what 42% of the population to jump up and down. Maybe a spike up, and then reversal that way. But if we close lower today, we're down 5, I think now. Yeah, down. If we close lower, just stay short on this one. Hog futures. Basically, it's pausing here. If it continues, maybe up to 70 is the happy place on hogs. They are coming off of hogs anywhere from 20 to 40 cents is at the lower extremes here. So usually about the lower 40s is usually the lower end of things. And that we're beginning anywhere from in the 60s to the 70s is usually the upper end for hogs for a long period of time. If you look at like, this one includes the bull market, but this is probably, yeah, see, it's at its happy place on a weekly level here for hogs. I'd get into the hog business though. Prices are cheap. Copper. Okay, copper. We're opening up at resistance. It's halfway back into all this mushy area here. Obviously, there's still money that can be. The money went screaming into this and then came out of this. And there's still more to run on this one here, but copper may price itself out of use. That's how it usually goes. I expect copper to actually get back into the 160 area eventually here, heading into the next recession. Okay, heating oil. Okay, so this is that strong reversal day about a week ago. Then he had follow through. I think we're probably making a bear flag for right now, but this is going to be your trigger for continued selling. Natty gas. Okay, so natty gas still pointed up, but basically we're trading sideways for right now. A lot of wicks up in here. It's having difficulty getting back through that gap area that we had before. We may just kind of sit this thing sideways for now. Moves up, sideways, moves up. Then you get this longer sideways pattern, move up again, and then a longer sideways pattern in between, say 308 for right now. But any move above here, I think it's going to go to like what is that, about 408 on here. We did clean them out pretty well on here on this move down. But you can see, a lower or a higher high, higher low, higher high, higher low, higher high, higher low. Say the same thing. Just draw your trend line. Take a weekly here. Yeah, see, just could be in a longer sideways pattern on here. The bodies are still in there on a weekly basis, though. Dandy gas. Let's take a look here real quick since we have EIA today. What do we have? 340. Let's see, what is that? 342, 43, 51, and pivots, happy place 26. Could be what, 6 lower, 7 lower. These are pivots, 28, 29, 25 area. Yeah, we may we may be stuck in a sideways range here for a little while, which is fine for the bulls, which is fine. I'll take sideways versus down, right? Okay, NASDAQ. All right, same type of deal. NASDAQ has its 8 days of running higher. Now we have a pause inside day. Like I said, I keep going over the charts, and it's, this is a selective few, your Apples, Amazons, things of that nature. But like I wrote before, as long as the indexes are still pointing up, even though they keep making a little bit every day, you got to go along with the flow, even though you're getting divergence. What was it? The New York Stock Exchange advanced decline line actually dropped, I think, from 1996 to 2000 as prices went higher. So it's just we were just found a selective few on that end. But basically, it's the small cap indexes. Your NASDAQ and your Russell were the key to the upside. Is that you're going to have issues with the stronger dollar here on the conglomerates. Take a look here on the inside. All right, so here's our pivot here. So we're basically at pivot. Where is the upper end for today? Oh yeah, same, pretty much the same as yesterday. We got to 40. Okay. And now the next one up is 7. We'll just say between 70 and 80 since we were playing these in 20-point ranges here. And the same thing here too. So if we close down today, I'd stick my nose out on the short side. What I think, because of how the patterns are kind of playing out, is that we just poke our head through on the inauguration and then reverse. Yesterday's biotech talk. That's the same game we're going to play here. You know, every time he opens up his mouth, whatever he says, we're going to go beat on it. I think under Clinton and Bush, the federal government with the drugs did lock in prices. So you can go back and see how the drugs did under Clinton and Bush. But it's, you know, if he's not going to spend, it's going to. See, here's the deal, right? Under Obama, we have the smallest government in 50 years. Even though I tell people Obama's the best Republican we've had since Eisenhower. They don't believe me, but just look at his behavior. Yes, he comes down as Democrat, but this is politics, right? We have the smallest government, and then if Trump comes in, he's actually going to expand government. He's going to be ending up being more Democrat than Republican on here, because he's going to be a supply side spender. If that happens, then that affects the corporations, right? If you don't hand it up, if the private sector, if he's not paying the private sector, then that side is going to falter. Compared to the public sector. Okay, the United States is a mixed economy, but we're more socialist communist than you know. I point it out all the time. If you work for the Department of Defense, you're a communist, because we just invent jobs for you. You know, turn an airplane into a helicopter, and you have a job for 40 years, even if it doesn't fly. But it looks like that's what he's going to do. He's gonna be a supply side spender here, but we're at a time of tightening here, so he's gonna have issues with the Federal Reserve, which of course his thinking is real estate thinking. I'm always shocked when you see these guys with when they file their taxes, like Arnold Schwarzenegger and stuff, and their holdings, and it's mostly in real estate. I'm thinking, why aren't you in the stock market? You know, homes go up about 3% a year. When you look over, you know, I have data going back to the 1400s in Amsterdam, Holland, and that it's about 3% a year. Stock market's about twice that. But there are laws that say you can't take your home. So that's why they pile it into these god awful homes, you know. Pay $1,000 a day in property tax, you know, because that's what it is. You know, they can't take away your primary home, kind of thing, so they hide it there. But there's just overall, in general, the amount of money that's moved into the market since the bottom is just kind of scary, and that's my biggest fear. Like you pointed out, that we actually correct not stuff from 2009, but from 1933. S&P 200 people. That's the thing I fear the most. So. But Cav, we've licked depressions. That's not ever going to happen again. All right, so that's right. We have it all figured out. No, no, we don't. All right, so here we have, you know, pretty decent move here. What do we have? 4-hour chart. So decent move here, and then the pullback. So we're going to probably begin to start getting stochastics divergence on here. When you get moves like this, and then they pull back more than 50%, another move and pull back more than 50%, you're going to begin to get divergence on there with stochastics and RSI. Gasoline, same type of deal as heating oil. I'm going to treat these are bear bounces. I was looking for 152 to cover the shorts from up there. We didn't get there. Okay, so 146. All right. gasoline comes back through, then it'd probably be 146. What do we have? 157. Now I'm only leaning on the short side of stuff because basically it's from the post-Brexit frothiness is the way I'm leaning. You have to understand here though that I've been a bull for, well, on this phase since 683 on the S&P, and then at 2163 I kind of said you guys can have you guys can fight over the last 10%. It's just due to the fact that we need some sort of healthy correction. We did have a running correction, but we need something healthy to move this higher. But we're dealing with it was kind of like I'd rather short debt than buy stocks kind of thing, and we're still sitting there, because interest rates haven't normalized yet. But we're gonna, as the baby boomers move on, we're gonna have a lot of indiscriminate spending, I think, from the passing of their wealth, somewhere around $60 trillion. Let's just say $60 trillion is going to be passed on. Like it's going to be like winning the lottery for millions of people. And lottery winners, what is it? 70 or 80% are broke in 5 years. What is it? NBA players file bankruptcy 2 years. 80% of NBA players file bankruptcy 2 years after they leave. The numbers are just staggering. Humans just, even though we've been beat into submission and to save, pay down debt and save, we don't handle money. We're a little bit too optimistic as humans. We're the ant, we're the grasshopper, not the ant. All right. Okay. Aesop's Fables. Stop that, Kevin. Okay, sugar. Money's into it again, and we're only half back. Looks like a larger sideways pattern on here. But for now, because of the trend has been up for a while now here, I kind of have to lean with it. But we may have some sort of ABC type pattern here. I just count this as a 5-wave higher here, and so this could be like A, B, and then C, and then it will continue on. But that's what I'm looking for, right? And I was looking for a drought somewhere in the 2018-19 period here. So we'll see how this year pans out. For us here, we've had moisture. We only get 4 inches of precip a year where I'm at. It was a lot easier to watch crops when you're living in the Midwest. I just rely on the chart. Okay, silver, just like with gold. Remember, it's an industrial metal. It's moving higher, but not much interest in there. I'm just going to wait for silver to go back to $5. Okay, Russell here. Russell, as with the Nasdaq, that's where the little caps are at. That's the game we're playing at now. Stronger dollar, small caps. Same type of play of like 1997, 98, 98 kind of thing. Sideways on here too. It's more, you can see it a lot more in on the YM for distribution on that. Same type of thing here too. I have this marked as 52. Is that about right? That'll work. 52 comes through 52. Okay. So I talked about a jab. You move higher into the inauguration and then you reverse it and just fall apart. Okay, but you basically have a sideways pattern on here, but you have the money's in here. I'd like to see some sort of pullback under 1,000 on here and then get back in. Kevin, you're scary. Well, take a look at the big picture. We have to start off by correcting, here's 2015. You get a decent sized correction. You go back up, come back down. Well, I guess that's around 12. And then go from there. But this is where this and your Nasdaq smaller cap type stocks, that's where the party's at. Conglomerates are going to have issues with the your Coca-Colas, and everybody are going to have problems with the strong dollar. Let's take a look here while I'm at it. Okay, happy place. All right, so here's your support for the happy place, 68, 1368 on there, and the money's in there. You can see how the money gets up to the upper end, it rolls over. Well, we're only half back and all the money is in there, so that tells me that this is susceptible to coming down. Should I move it that deep? No, we'll move it right here. We're getting close. This thing's going to roll over. And if it does, if the market does roll over, if we trade lower today and we get a spike for the inauguration kind of thing, you could be short from anywhere from 9 months to a year and a half. So remember that one. If you eventually here, once we roll over, I have a whole bunch of SPX index puts going out as far as possible, and I'll show you how. Everybody wants to sell out. The money's coming in. They can't wait to get out of it. But if what you can do is you can stagger your way out of it, and that's what I'll do. If you own 10 of them or 50 of them, sell one and then buy 2 calls kind of thing. So at least you get your taste of, you want to sell out and get calls. You do get a 5-point bounce or whatever, and then it just craters another 20. And then you're like, oh man, I should have held on. That's right. You have to hold on. This is going to be a time thing. Okay, so we're back to the bonds things. Money's moving back into, they're hiding out in paper here. So you can see that the money's, this looks a lot better than equities. Equities been basically trading sideways, and that's what we're doing. They're basically hiding out in debt for right now. To me, it's just an oversold bounce. Get up to about 167, and you want to start looking for shorting areas again. Okay, so this is 67, 69, 71. So, short there or wait for it to turn back through. VIX, I pointed out some VIX charts. We're at an extreme again here too, on individual VIX futures. The low lows, I think, were summer of 2014. And, when I look over the indexes and stuff, the stock market right now, in my eyes, as a whole, on a global type basis, kind of peaked out in 2014 with underlying strength in that of the indicators. VIX futures, the same way of playing before, buy it 13, buy it 12, buy it 11, sell it 14, 15, 16, that kind of thing. Because VIX won't go to zero. It's basically range bound. But that's basically, it's kind of like a scatter plot. 90% of the time it spends under 15. You just, buy it 15, buy it 14, buy it 13, and then sell it at 16, 17, 18, 22, 24. So it's about 28. YM, okay. You can see the money that's in the Dow, okay. And we have a lot of monies in there, so this is susceptible. So it's one of those where, I'll treat this as a double top for right now. The money's in there. We're getting this type of pattern. We crack down here. Then I'd still stay short. Let's say 19.7, and then let it ride. Like I said, I don't think this is going to hold. By then, if you drop down here to 18.5, drop down to 15, so we can lose 20-25% in the market just because of you have the frothiness in the calls that I pointed out. I mean, you can see the money here. The folks just got involved. This is it. They didn't want it down here, but they sure as hell want it up here. So just start buying your late dated puts. On any strength. We're running out of days because once POTUS gets in there, it's just going to be a nightmare. The whole thing is that this is supposed to be orchestrated. You have handlers, you have writers, you have everything. But you see this repetitive pattern of what he does and does not know. Yeah, he's a Harvard graduate, but he talks like a ninth grader. Okay. So I'm not knocking the guy, but I want you all to remember you can't change the stripes on a zebra. What you get is what he's not going to have come to Jesus, You know, John Corazine got in a traffic accident, and did he, you know, come to Jesus? No, he did not either. You know, he weaseled his way out of 20 years in federal prison. You know, and that's where we're at. We're at a very incredibly nasty period of a dark chapter of American history with corruption. It's really bad, but that's okay, because what usually happens is we flush the whole system, and then we get what we really need, like school teachers for presidents. All right, hold on a second. What's this philosophy shit? I'm not paid for this philosophy shit. Hey. All right, so, well, I guess, you know, I suppose if you're, you know, innately a perma bear, you know, the glass is half empty all the time, then, you know, you're having a gay old time. I just prefer for the masses just to, you know, guns and butter, chicken in the pot, make them happy, give them a job. That's all they want. All right, so as you can see, the bodies are in YM. Yeah, so we're getting close here. So hedge. All right, bond, same thing. I just view this as a short covering rally, but this next swing, you know, if you want to say that this is an A pattern, a B pattern, and we're working on a C pattern here. 58 here. But that's, we have a long ways to go to get back to normal here. This is our first bounce before we continue lower. 136. We'll eventually get to par, which is 100. So we'll lose another, bonds will lose another 40%. Kevin, you're scaring us. Hey, that's just how it goes. You know, that's life. You've already lived through, you know, if you were born before 1980, you've already gone through it. If you were born after 1980, you're not going to like this at all. Trust me. You're definitely not going to like that at all. Okay. Where are we at? Bonds. Okay. Corn, happy place. Money's in there. Something's going to have to give on corn and beans here. We have the dollar coming back, so maybe what I'm looking for here is just watch out for if things poke through and reverse. You know, weather-related type stuff. You know, it's you know, a stronger dollar. You know, the stuff is going to come down. Let's just say if it comes down, it's going to break hard. If the grains in that oil seeds trade lower, they're going to they're going to fall precipitously. Fives and twos, same type of deal. You're now looking for areas to short on fives and twos and stuff. I guess you could wait for it to come back. 117 again. Bean oil, it did bounce from my, watch it closely, people. We did get a bounce off of there on here. Same type of deal, you know, like oil products, the crack spread versus the crush spread. Yeah, this looks like a bear flag. We're going to head lower. This is bean oil. Notes, same type of deal. You're now looking for area to short. Beans, same type of thing here. Money's in there. They're looking at this. This reminds me of 14 and 15 on natural gas. Here, they saw this and they were bullish and it went against them. But on the short run here, I think the bulls might have it. Though we shall see, won't we? Sideways pattern. Yeah. Okay, so we're getting sideways channel here. So trend's going to break out, but it's the part where I saw the bean oil move, and it's like, okay, I don't think I have bean meal on here. Take a look at bean meal. Yeah, bean meal's come down too. Money's come out of it. So like bean meal. All right. I'd have to say lean on the long side on bean meal here. What do we have? Stopping points 17, 21. And up in here 25 for bean meal. Yeah, we're in a sideways pattern here, but money came out of it, so they'd have to chase after it and then watch out for the reversal lower. So I'm looking at lower prices for harvest for 2017. And your twos, same thing, twos and fives, you're looking for places to short down here. And wheat, unfortunately, we finally poked its head through, came back 420, didn't hold 420. We're trying again. Now we're at 417, but the money's moved in there. So it's one of those that you may want to save for under 493 here. The deal is, the thing with commodities is you add to winners, all right? You put in more than what's needed, the minimum. The whole reason why these things move like this is because you guys are just putting in a small percentage. You put it in barely 10 cents on the dollar, okay? And that's why they whip around. If I said, if you put in, here, if you put in the full amount, this is 20 grand, and it goes up to 420, you make 5%. That doesn't sound like much compared to, I put in $2,000 for margin and I made $1,000. I made 50%. So that's how come things get kind of get difficult in commodities, because you put in too little of margin. You need the staying power. Okay. But here for right now with wheat, even though I wanted to see stuff under $4, and then just the makeup of the market, but the money's in here. What's a weekly look like? Okay. Weekly's a little better. You can see coming off of some recent highs. This is the hope here. The money was higher than the previous highs, but the price didn't, and you got your washout. And so you're getting early people to get into here that's sideways. What I would do is I'd make sure you follow watching the deferred contracts. I guess you could do May, July, December. Well, I guess you have to actually watch all of them. Because the same thing, it's kind of like this. They start talking about, wheat's at a X multi-year low, then that'll perk up my ears. But I know wheat can get in under 3, but we're getting close to it here. I would prefer to play beans though, just because I've watched that the longest. But you can get the same amount of movement in wheat too, so you can get multiple buck moves. So I think that's it, right? Yeah. All right. I'll get this out to you. Like I said, this is how I'd look at it: is I'd buy some puts. I'd buy some puts if today we're down below pivots and that for ES and that. I'd stay on the short side, but look for some sort of give the people what they want. Whatever 42% of the public gets all giddy on when we at the inauguration. Something where you jab higher and then just reverse down and drop down to 1,800 or 1,600. I think is what I was looking for from here. What is that, daily? Weekly, any better? 1,600 on here? No, it's down here to the back. Chinese low. Okay. Chinese low. Okay, so this is the Chinese low. This is the first interest rate hike low, and we marched up this away. And here's where we're at. I think we'd end up coming through to 1,600. So this should do the trick. What is this? 33. Yeah. So, like I said, I guess you'd have to come back a little bit more on a weekly basis. Wouldn't be 57. All right. Yeah, just look for some sort of, the deal would be is to give the people what they want. Ooh, that's a good king seldom. Poke its head higher and then roll over. Because we are, we're doing everything we can to slow things down right now in the economy. So there you have it. Have yourself a wonderful day. What number's that? 33, and then do the trick to 1600. Okay, bye-bye.